You're welcome to another day of financial analysis. Today, we are going to be practicing some of the things that we saw in the last two classes. Today, we are going to look at the revenue tracker, how you can design your revenue tracker in Excel. And of course, even your expense tracker, it will be the same thing. It will just be the opposite of the revenue tracker. We are going to look at the cash book, the debtors book, the creditors book, and stock, how you can manage your small business. Or if you happen to work in a company tomorrow as a finance person, or in the finance industry, or you're an entrepreneur, you can easily manage your own business. It is very, very easy, but many entrepreneurs fail to do this. Then tomorrow, we will look at how to draft a budget for a humanitarian project, because what we saw last week was a simple budget that you can draft maybe for household items or for your mini business. But tomorrow we'll look at drafting a budget for a humanitarian project. We'll look at the income statement, and we'll look at the statement of cash flow. This is strictly accounting. Uh, Tomorrow we'll look at statement of cash flow, and we'll look at the balance sheet. I wanted also look at financial ratios for those who want to do stock market, to want to trade in the stock market, but we may not have time for that. And it's deep. That's really deep. It's beyond the scope of this Excel course. That's strictly a financial course. If you want to do ratios like current ratio, debt to equity ratio, to see what investors look for before they invest in businesses. That's deeply financial, which is strictly a financial course. So we may not go too deep into that since we are limited to, except for career upliftment. So we may end at the level of balance sheet tomorrow. And maybe we can look at two ratios. Maybe we can look at the current ratio tomorrow if we have time. And maybe we can look at the debt to equity ratio, something like that. Okay, so how do I get this knowledge? How did I get this knowledge? I started my career in the health industry, but when I got into entrepreneurship, launching its analytics, I saw that there's need for me to have some financial knowledge. And also because when I was analyzing data for students, I started having students and researchers from the finance industry coming in with their data for me to analyze. And I didn't quite understand some terms. So I had to take it upon myself to do further studies. And that is how I got a master's degree in business administration, which I studied a lot of organizational management, financial management, managerial accounting, decision making, strategic decision making, digital literacy, and a lot more courses such as information management and technology, and a lot more. So that's how I got the knowledge to be able to teach you this. Although I wanted my finance analyst to do it, but he is so busy now with work that he cannot be able to take this. So I'll be taking you on this. And I also got some experience because I'm working with a company as a finance officer, a startup company. So just two of us, the CEO and myself, we are working, and I'm working as his finance officer. So I get to track his income and expenditure, and I get to apply what I learned in school. All right. So we are going to dive straight away to the various things we have to do today. It's going to be a very, very short lesson. And those who are not able to, those who are not opportune to join, they are going to follow the recorded session as we are actually recording right now. All right. So we're going to start with the revenue tracker, and I want us to use someone here. We have 5 of us in this call. Is there somebody who owns a business? I want us to use your business so that it becomes more practical. I don't want to use, fictitious data. Is somebody having a business? Does someone own a business here amongst those who are present? Mr. Chu, Will, Jill, Mercy, Nicolene, anyone who owns a business?
Yes, have.
All right. So what business do you run, Mr. Chue?
You want the name of the company?
Yeah. What business are you into? I want us to do the practicals using, I have unstable internet. I want us to do the practicals using someone's business so that you can,
I'm saying that the name of the business is called United Printers.
United.
Printers Equipment.
Okay, can you write in the chat box? I can't hear you quite clearly. So what do you do? What are you into?
I do repair printers and I do sell new printers to the organization as well to maintain them.
Come again.
I do sell printers and
Okay.
also maintain the printers.
Okay, so you are into printers, sale of printers, sale and maintenance of printers.
Yeah.
Is that the only product you sell?
Also the toners, the stationaries.
Toners. All right, fine. We are going to use your business for our today's. Maybe if some other person has one, you can use that person's one for the cash book. I would have loved 4 businesses. So we use one for the revenue tracker, we use one for the cash book, one for debtors register, one for creditors register, and maybe one for stock. All right. So Mr. Chewy is into printers, sale of printers. And this involves printers and their accessories, right? Toners, maybe you sell power cables as well. So for a revenue tracker, you are tracking just what comes in. We are not tracking what goes out, just what comes in. What is the essence of tracking your revenue? Tracking your revenue helps you to understand your business. Which product sells more? Okay. Which product sells more? Which product should you order more? That's why you do revenue tracking, because in revenue tracking, which product gives you the highest revenue? So in revenue tracking, you have 2 things. You can be able to know the product that sells more and the one that gives you the highest revenue. Of course, the product that sells more must not necessarily be the one that gives you the highest revenue. We saw it in an example that I showed last few weeks. I can't quite remember what that was, but we saw that there was an item that was sold the highest number of times, but it wasn't the item that gave the highest revenue, which means you can sell toners more than you sell printers, but printers give you more revenue than toners. That's just what I want us to understand here before we dive into that. Okay. All right. So for your revenue tracker, we have just 3 things that we want to see. The first thing we want to see is the date. The date is a must column when it comes to your revenue tracking. You must have the date. The second thing is we want to see the item that you have sold. And we want to see the revenue that came in. This is very simple for someone who doesn't want stress in accounting. You don't want to go to number of unit or whatever. You just want to write the date, what you sold, and how much came in. Very simple, but very important. All right. So let us do some revenue tracking for Mr. Chewy. So let us say that my mouse is a little bit shaky. I don't know. So okay, so let us say, let's just start tracking from yesterday. Yesterday was July 1st, right? So like I told you guys last time, when you're writing your dates in Excel, Excel is owned by Microsoft, and Microsoft is an American registered company. So they use the American dates, standard date for in Excel. So unlike us in Africa, when we start with the day, the month, and the year, in Excel, date is understood as beginning with a month. All right. So always take note. It's a rule of thumb. Take note. So if from instead of writing the 1st of July 2025 as the date, I'll instead start with July. I'll write July 1, 2025. 25. Excel understand this as date. Okay. And when you see Excel will take it, you align it to the right. And if you come up here to the data type, you will see that it is date. Oh my. What am I doing now? My mouse is... So what I was saying is, when you come here and you click here, when you make this say active and look at the data type here, is date. Automatically, within format this as date. But when you type it, the way Excel understands, Excel sees it as date. All right. Oh God, this is terrible. I need to check. Maybe I need to go in your mouse. All right. So on the 1st of July, so you can have the same date here appear several times. It depends on the number of items you sold on that day. I hope you are following. Oh my God. I hope we are following. So let us say that. So you can actually, if you are fast in writing in a book, you can have a cash book or a revenue tracking book, a revenue tracker register, where you write these things. When I used to say in my sister's shop some years back, she was into kitchen utensils. We had a book. Every item that you sell, you write it. You write that item, you write the quantity, and you write how much you sold it. So at the end of the day, we calculate, we see how much has come in. But with Excel, if you are good in Excel and you just with your smartphone, we have Google Sheets nowadays that you can access Google Sheets in your phone. I mean, that's what we are building for companies now. Analytics can build that for companies, because when you get to prospect, people will be like, I don't have a computer. And no, you don't necessarily need to have a computer before you can track your income digitally. With Google Sheets, we just design it for you and you just come and enter your data. And automatically you have your totals. All right. So on the 1st of July, let us say that Mr. Chewy sold, let's say the first client comes and buys. Let's just assume that you sell printers, computers, are into hardware. Okay, Mr. Chewy, let's assume that you're into hardware in general, computers, desktops, CPUs, keyboards, monitors, printers, toners, reams of papers. Let's just imagine that you're into that. That's your business. Of course, you should think of expanding. When I'm teaching financial analysis, I like to make my students to visualize. You're into printers and toners now. Where do you see yourself in the next 5 years? Will you continue to be into printers, or you would diversify? Diversification is a strategy to keep yourself in business, because tomorrow the business of printers can fall. But if you have not diversified, say, into maybe CPUs or monitors, you may find yourself going out of the market. All right. So let us assume that on the 1st of July, you sold, first of all, you sold a computer. I don't know, it can be a design or maybe a model, maybe HP or something. For now, let's just use dollars, because now we have people from different countries, and if I use franc CFA, it might not really flow. Let's just use dollars. Okay. Let's just say you sold it for $300. I don't know how much that, if that's feasible in your country, or for the price. Let's just assume. Let me just add dollars here so that it's understood that it's in dollars. Still on that 1st of July, you sold another computer. Let's just say that each item you sell, you write it. Okay. Just like you go to a shop and you sell, and they say, okay, register that this person has bought this and this. Somebody is there with a computer just registering. You know, the data clerk or the finance person in that shop, or the cashier, as most of us call. Maybe this one is Dell, right? Let's say maybe you sell Dell for $250. Still on that first, you saw a Dell battery, maybe also into batteries, right? Maybe you saw a Dell battery for $25, something like that. Maybe see on the first, maybe you sold you sold toner. Maybe toner is $50. I don't know how much. Maybe it's maybe $75 if a good one. Okay, so you say this just for the first. So what you will do is that you come to your Excel and you write this date, and then you copy that date and you paste it down again. You see what my mouse is doing? You copy and you paste again. All right, so that you can highlight and autofill. We saw autofill last time, right? Why am I copying and pasting? Because if you autofill just from this date, Excel will think that Excel will continue with the second and third and fourth and fifth. Let me try and you see. If I autofill from here, Excel would think that, it's July 2nd, 3rd, 4th, But if I copy that same date and paste, I don't know what's, God, this one. All right, so if oh my goodness. So if you copy the same day, see, is the same day. This is terrible. I copy and paste. Okay, and then please just give me a second. Let me see what is wrong with this. The mouse seems to be having an issue. Maybe I try working with the mouse pad itself. All right. So you highlight the two dates and then you autofill. Okay. So what is what I used to do? I will autofill and end here. All right. Then on the second, so it's gonna be July 2nd, 2025. And mind you, sometimes you write a date like this and Excel will not still understand. Sometimes Excel it might go crazy. So the best way that I always use the best ways that I use the date function. Okay, so we have shown you this one, so you should know. But you can also use the date function. And how is it used? Very easy. So let me clean this off and show you how I use the date function. So I'll just come here and put an equal sign. Remember the rule of thumb in Excel is that if you want to write a formula, you must start with an equal sign. Okay, so I start with an equal sign and I start typing dates. As I just write D, the dates formula appears, and I'll just double click on it, and then Excel already tells me what or guides me on what to write. It says year, so I'll write the year 2025. I'll put a comma, and then Excel highlights month, which is 7, and then Excel highlights day, which is 1. All right, then I'll close my braces and I'll hit the enter button. So what happens is I have written my date using the date function. If you do like this, you'll never have any problem working with pivot tables. So I'll highlight the two and I'll autofill. So if I want to go to the next date, instead of writing the date function again and again, I'll autofill and give one row below. What do I mean by one row below? I will autofill and count, even though there's nothing here, I want to start writing on the second here. I'll autofill and end here. Then I'll click here and come to my formula bar and simply change this 1 to 2 so that I won't have to write the date function over and over. I'll just change that 1 to 2 and that gives me the second. Okay. So let's say on the 2nd of July, Mr. Chewy sold a printer, right? And it's good to use the same spelling here so that you can be able to come back later and do your pivot table. So you sold a printer, let's say for $200, and maybe somebody came and bought 2 printers, You know, you must not just, this is just one item that people bought. Somebody can come and buy 2 printers. All right. So if you're using the revenue tracker, which is a very simple one, it's still printer, right? It's still on that printer, right? Maybe it's a model, maybe there are 2 models of printers or 3 models, and this person came and bought 2 copies of one model. You can still put it on a printer, and then maybe this one is $400. It's all about printer. But if you have many models, maybe this one was say maybe printer model A, C, or something. Then this one is maybe printer model D, C, or something. You just specify it. So that at the end of the day, when you do your analysis, you can know which a particular printer sells more, and that will inform you which one you should stock more. You get the point. And sometimes seasons also matter. Once you work with data like this and use the date, you begin to see seasons when peak seasons and slow seasons. Towards December, most often in Africa or in most Christian countries or Christian cities, there's influx of money into the economy. So there is the sales of many items go up in December. Items related to clothing, shoes, you know, the fashion industry and the agriculture industry, the food and how do you call it? Food and what? And processing industry, something like that. So you'll be able to know which, for me, I already know that it's analytics. This period is a peak period for me because students are preparing to go in for defense and they need data to be analyzed. Some have analyzed the data and it will be sent back to refer them to 8 analytics. So we need 8 analytics to do their PowerPoint. So we need us to coach them on how to write their discussion. So I know that this period is peak period for me. And so I know how I position my team this period between June, July, yeah, from May, June, July. I know that okay, from August the trend will start going down. I can focus more on personal development. That's when I learn my new tools, Power BI. I learn R, Python, and all because I have little work. Then this period is a period when I launch most courses and analyze data. So you should be able to know which period, and it comes just from observation and of course data analysis. So once you do like this for a whole, imagine you like this for a whole year. Like I showed you guys what I did for a Excel store for a whole year, right? You saw how it was so long. You saw all of that. If you do that for a whole year and you create a pivot table, of course, Clinton showed you guys how to work with pivot tables. You create a pivot table, you'll be able to know the time, the season of the year where you have your peak season. And before that season comes, you should be able to stock your product. All right. So this one, you don't need to even put any total here. If you want to see the total for the day and you're using Excel, just come and highlight it. Just highlight the total for that day. This is for the first in here, right? Then you come down here. You see some. It's when you highlight anything in Excel, which is data. Excel gives you the average, it gives you the count and the sum right down here. You can see the mouse. So the sum is $650. That's how much you sold on that day. Okay. You don't need to be punching your phone or your calculator. So on the second, maybe this is what you sold for on the second. Okay. You just copy the second. Since it's just the second and it appears once, you can copy it and paste again. And maybe you sold one more thing on the second. You just highlight like it just autofill. Maybe you sold a power cable. Maybe you sold a power cable for $50. Is that too much? Maybe we can put $10. You know, maybe you have something like that. So you chart your income like this. For those who want to transfer right in a book and then you transfer it to Excel, you can actually just come and you can just count the number of computers, right? Instead of writing computer, toner, printer, you can just count, but you give you a hard time. So just type it, just do it like this. It will be easier. But even use your phone to do it or use your book, and then when you're free, when there's no customer in the shop, you can be transferring it to your phone using your Google Sheet. All right. So at the end of the day, let's just say that anyway, let us just ask ChatGPT to give us more of this data so that we can populate this guy. And then we'll do a pivot table and you see what I'm saying. It's very easy. All right, if we can do just this one today, and then we'll look at this other one, which are very easy, no problem. This one I really want you guys to do, to know. So let me just get to this, how you use AI for your good and not to use it to. So we already have some data. We just want Power BI, ChatGPT to use that data to give us more. Maybe I can share it, tell you guys see what I'm doing. There's also it's a whole course, how to use artificial intelligence. Career upliftment is a whole course. Is that ChatGPT? I think so. Let me share the screen. All right. So we can just say, hey, ChatGPT, using the pasted data below. Which one do we use? Is it randomly or populate with more meaningful data for up to 100 rows? All right, up to 100 rows for Excel. Say this and I paste the data. All right, I copy it in Excel and I've just come and pasted. When you paste, ChatGPT extract the data for you. This is what we copied, right? We have extracted data for us. So we can just, click on this X button to remove the picture. And this is what we want ChatGPT to do for us, right? So let us just, sure. It says, sure, here is a realistic and meaningful expansion of your sample data to 100 rows. I'll maintain the pattern of data spanning several days in July. Item description, a variety of IT and office-related products, costs, varying prices in US dollar. You see, I think it's just for the month of July. What? Okay, it's writing us, giving us quote. So it actually gives us an Excel, an Excel sheet. All right. So ChatGPT give us an Excel sheet for July. But I want it to be for more than July. I want it to be like from July to December, because I want you guys to see the various months when we do the pivot table. Okay. So let me say, make it from July, December. All right. Just say it should be like that. All right. So it gives us that. So it's going to give us an Excel sheet, which we can always download. So that's it. So I'll just click on it and download. And voila, that has been downloaded. Let me open it. Let me open it, and you guys are gonna see. So you don't need to stretch yourself when you're teaching, when you have AI. My mouse isn't working. It's terrible. Right. So I have opened the data, and let me share a particular screen for you guys to see. Okay. So there is that. So that's the data that ChatGPT has given us. We have the date, we have the description, item description, and we have the cost or the revenue. All right. So we have that. You see UPS. I mean, awesome, right? So let us see if that data is formatted as date. So our greatest surprise, when I click on it, what do we see? General, right? So it's not formatted as date. So we have to highlight. So we have to highlight the whole date column, and then we format it as date. All right. Even here, it is not still formatted as date because it is supposed to be shifted to the right. Anyway, let's do our pivot table and see if it is going to work. So when you have analyzed, when you have written your revenue tracker like this for the whole year, you can always create a pivot table. Maybe even for 1 month, you create a pivot table. As data comes in for the other months, you go to the pivot table and you just refresh, as Clinton showed you guys last time. So if I come to insert, I take pivot table range on a new sheet. I say, okay. So we have the date, the item, and the cost here. So if I come and take the date, I can put it on my rows. Then I can take the item and put it, how do you put it? No. Let me put the items on the rows. And of course, I told you guys that in pivot tables, this sign here is for figures, right? So I put the cost here. Then I'll bring the dates column here. All right. And then I will go to the date. If you work, if the date was actually formatted as date, when you click on it, you should see months and years. All right, you should see months and years. But when I click on it, I don't see it, which means that it was not formatted as date, even though it was showing dates in Excel. Which is why I was saying that you have to write this thing using the date formula. All right, so let's go back to our financial analysis sheet and read it from there. Let's just use these ones that we have. Let's use these ones. Maybe I should just maybe autofill for a few days. Yeah, maybe we just put the third. So you see the importance of using the date formula, right? Right, date. What was that? Seems to be an error, inconsistent formula. Okay, because the second is below the third. So let's correct it. The error will go away. You see. Mhm. So we have fourth, and then we have fourth as well. All right. So let us just populate this again. All right. So it should work now. If it doesn't work now, we have to call Amadio. All right. So now let us insert our pivot table. We have used the dates function to write our dates, which is what we want. So we insert our pivot table, and then we bring our item here to the rows and our revenue to the values. And then we bring that date now back to the rows as well. You see now, can you see clearly? I don't know if I can expand this for you guys to see. When I click on date now, do you see? I see years. Can you see years, quarters, dates? Can you see that? All right. So that's it. So if you create a chart now, oh my God, you want to do this thing on Clinton, where you can create a chart here, a pivot chart, and you can even put a slicer. I think Clinton taught us this thing, right? You can put a slicer for the date, and you can just go and click the date, and the thing will automatically change for you. Those who follow the course from Clinton, you should have seen this already. So we can come here and we come to insert the pivot table analyze. Yeah, pivot chart. Then we can insert a pivot chart here. Anyways, let me remove the date from there. Then I'll show you guys what I want. So you see that date here has quarters and years. Can you see that? So let me bring back the date. Let me take it back. So if you know how to use pivot tables, it'll be easier for you to use Power BI, okay? Because it's built from this knowledge. So I take back the dates. So we have this, right? So let me just create a pivot chart. So in this case, I'm doing a pivot chart, not a normal chart. So this is a pivot chart. Maybe I can do two charts. I don't know. I just want to show you guys. I don't know if Clinton showed you guys, but I think he did. But that was the scope of what he had to show you. Let me just remove this field. I think he showed you guys. What did I just do? Field buttons. That's what I want to remove. Remove height field buttons. Yeah. All right. So I can copy this chart and I come to a new sheet and I paste this chart, okay? Then I can create another chart. create another chart. I think that if you right click here and take show fill list, it should appear back here. Okay, we have just one item. That's even the stuff. That's the problem here. If you have many items, you can create many charts. Okay, I want to create many charts, but with this one chart, I think it can still work. Once you create many charts, you can come here and you come and take slicer. Is it there? Pivot chart analyze. Okay, so you click on pivot, you highlight the chart, click on pivot chart analyze, and you can insert a slicer or a timeline. This timeline only appears when you have a date column in your data. So if I click on this timeline, the dates will appear. Okay, you can drag it and I put it here. Then I'll click on this date. All right, then I have to link this date to this chart. Normally the date should even appear and give us the month, the year, and the others. So I will right click on this chart. What's going on? This is Jackie. What's the problem? Oh my God. All right, so I click on the date. Anyway, just one chart. So let us see something, okay? So this is the date slicer. If I choose just June, do you see something? The data automatically adjusts. So why is it 0? Why is there no bar? There are no bars here. There are no bars here because there was no data for June, right? We began our tracking in July. So if I come here and I click July, what do you see? It's just data for July. So printer this year was the most, give us the highest revenue. Okay, give us the highest revenue in July. Then in August, there was no income because of course we have done just for July. So I want to show you guys that when you do this revenue tracker, you can create a pivot chart like this. Instead, your time slicer, and you can choose whichever date you want, and you see the results. I think Jason showed you guys this thing. You have in a dashboard, you have many charts. When you click the timeline, it changes automatically. And that means you build it just once and you use it for a lifetime. So it makes it smart. All right. Okay. So that is that for revenue tracker. Let us quickly look at the cash book, the debtors book, and creditors book. This one is easier. You just need to, cash book is similar to revenue tracker, but in this one, you register your expenses as well. So this one is mostly for accountants. Or for those of you who want to own registered companies where you track your income, you do income statements. So for your cash book, similar to what we have seen for the revenue, you have your date. Okay. This one is a little bit detailed than the revenue tracker. You have your date, July 1, 2025. Let's say, for example, you sold a printer, Mr. Chowi, for example. You sold a printer for $500. Was it an expense? It was an income, right? So this expense space is empty. So what's your balance? You still have $500. Very easy. Still on that, let's say still on that 7. Still on that 7, you bought some toners. Let's say you bought some wood. Maybe you bought some toners for $1,000, right? Was it an income? No, it was an expense, right? So it was $1,000. So what's your balance? Your balance is today minus yesterday. For it, very easy. You don't need to go to stress. Equal to, no, yesterday minus today, sorry. Yesterday minus today. All right, so what you had yesterday minus what you have today. That's your balance. So because you sold $500 yesterday, and today, or still today, you have bought toners for $1,000, your balance is a negative, which makes sense, right? So you just simply have to work with the formula here, and you're going to be able to have a total at the end of the month. So for example, let's say on the 2nd of July, 2025, you sold is it UPS? How do you call it? You sold a UPS for $600. So how much do you have now? Equal to, so yesterday minus today, right? Let's see if that's true. Sorry, this was sold, so I should have put it under income. All right. All right, so it's a bit tricky. So if it is income, it's today minus yesterday. If it is expensive, it's yesterday minus today. But that's not a big deal. So what's the balance here? The balance that you had yesterday. So we have here equal to what you had yesterday plus what you had today. Anyway, let me make it very easy for us. Okay. Let me make it quite easy for us so that it will not be difficult for anybody. Let us say that expense is negative. All right. So here I'll put negative 1,000. I hope it works. Oh, Excel doesn't accept that. Excel will not accept that. All right, so no problem. So it's gonna be yesterday minus today. That'll give us a balance. Now I have sold something today. So what's my balance? It's going to be what I had yesterday. Since I sold something, does it work out? This was $600, not 6,000. All right. So you're left with $100. So it's just like the balance you have in your maybe in your drawer. It's a bit tricky, but accountants can do this very well. If this is going to be difficult for you, just focus on your revenue tracker. But this one helps you to know exactly what came in and what went out each day. So that's the simple cash book, what accountants call the cash book. They simply work, play the gymnastic on the balance column. And at the end of the day, you have what you have in your hand should be equal to what is in your drawer. If it is not equal to what is in your drawer, it means that you made a mistake in calculating. Maybe you saw something and it's not record, or you bought something and it's not record. Maybe you remove 100 or 50 naira or 50 Uganda shillings and buy your granite, and it's not registered. So at the end of each day, the balance that you have should be equal to what is in your drawer. That's why it's a cash book. It's cash, what you have at hand. Okay. So debtors book is the same thing. You write a debt here. Debtor is the person who bought things from you and did not pay. That's a debtor, right? Maybe Mr. Chewy supplied 5 set of toners to a friend who has to pay the money later. So who was the friend's name? Maybe the friend's name is John. Maybe this was supplied today, the 2nd of July, 2025. You supply 5 toners, so you can say 5 toners to John. Maybe the 5 toners is $200. And when will John pay you the money? John will pay you the money maybe on the 7th of August. That's next week. So it means that your debtor should tell you when they're going to pay the money. All right. So for now, have they paid the money? They have not paid the money. So you still have 0. The day they'll pay the money it will be income, right? So you'll be a positive, it will be a plus for you. So that's how you work with debtors. Similar thing with creditors. These are people who supply you goods and you have not yet paid those people. So what maybe creditor's name is Ed Supplies. Ed Supplies supplies you maybe with printers worth $1,000. When do you promise to pay Ed Supplies? Maybe you promise to pay Ed Supplies in August. You put the dates. You put it because you need to know. Because what happens is that most often people borrow from us and they never pay. And some people claim that they forget. But if you are keeping a creditor's book, you will be able to know that you owe somebody and you have to pay. Okay? So that's that. So for the stock register, this is what when a stock comes in and goes out. All right. So maybe you have a warehouse, Mr. Chewy, or you have a packing store. For those who have small shops. So maybe today you went and bought goods, maybe in the economic capital of your country. Maybe you bought so many goods. Maybe you bought maybe 5 printers. Maybe worth $2,000. Today, nothing went out to your store, so zero. You're still left, excuse me, with $2,000. So this is today, the 2nd of July, 2025. So maybe tomorrow, the 3rd of July, 2025, you took two printers to your shop, to the shelf, let's say so. Those two printers are worth how much? $1,000 maybe. That's not stock in, right? That's stock out. So you should register it under stock out, $1,000. So how much worth of goods is left on your shelf in your stock, in your packing store, or in your warehouse? Is what was there yesterday minus what has gone out. So it'll be 2,000 minus 1,000. So you left 1,000, which means that the three printers that are left in your stock or in your warehouse are worth $1,000. Which means when somebody comes to buy, even if the printers have no more on your shelf, you already know from your stock book that you still have printers left in your warehouse or in your packing store. But if you don't do a stock, you don't have a stock register, you will not know whether some goods are there. Somebody comes to your shop like, whoa, what we see on a daily basis, and ask for a good or a product. You don't have it. You say, let me go and bring it. You go to your store or your warehouse or your packing store, and you don't see it. It is because we don't track our stock. You track your stock, you should be able to know which goods is. And when the goods is getting finished, you should know that you need to restock. That's the importance of doing stock keeping, which we don't do. If you like, go to the market tomorrow and interview 10 businessmen, you will not see any. If at all, you can see one that does stock keeping. And even this one we're talking about, Creditors book, they don't have it. Debtors book, they don't have it. They think that this is only for big companies. But if in your small business, if you can do this, you are going to be able to know how your business is running and make informed decisions. And that's the importance of data analysis in business. All right, so that's it for today. It's 10 o'clock, so we should be ending the class. And if you have any questions, we can discuss before we call it a day. There's just four of us here. Could be others will join. So we have Mr. Augustine, we have Joey, and we have this other person who just a number 82317. So over to you. If you have any question, you can ask.
Was very clear on my end.
Yes.
I'm saying that it was very clear on my end.
Okay.
Okay. Good evening.
Thank you, Mr. Augustine. Good evening.
Yes. I'm sorry I came late. I want to ask a question. Maybe the answer must have been explained in the course of the presentation. But I just want to ask, in a case where you have many goods to display, and in each of them, probably you sold some within the day. How then do you record them on the same cash book? Because
Okay.
I came in when you were explaining a single good that has been sold, how it is appeared on the cash book.
Yes. Is it this? Can you see my screen? I don't know if I'm showing the right screen. Is it?
Yes, I can see.
This is Cashbook. Is it what you're talking about?
Yes.
Yes, we have many goods here. So on this date, this is the first. This person sold a printer, which is income. So it's registered under income.
Yes.
And the balance is what the person has. Still on the same day, the person bought some toners. Maybe there was stock that came in. The person bought toners, and since it was money that went out, it's registered under expenses. Still on that same.
Yeah.
And so the balance now becomes what was there minus what you have used. So you have used more than what you had in your drawer or in your balance. So you have a negative. Maybe that was all on that day. Then on the second, the person sold a UPS for $600. So this UPS now comes in as an adding So it's an addition. So whenever you have income, it's an addition. So you take minus 500 plus 600, it will give you plus 100. So you can have as many different items as possible. You just need to know whether it's an income or it's an expense. As you can see here, we have printer, we have toners, we have UPS. You can have many as possible. You record all of them.
Okay. Okay. It's understood.
Okay. So at the end of the day or the month, whichever period you want to track, when you sum all of this, you should have exactly what should be in your account or in your drawer. If you don't have if it doesn't match, it means you might have not recorded something, or you over recorded something. You just check the numbers. And that's why it also good to have a receipt book, because when you issue a receipt and you are confused whether you wrote the right thing, you go back to the how do you call it,
The receipt.
other page, yes, and you cross check what amount you sold the thing.
Okay. Okay.
All right. Any other question?
I think that's all for now.
All right, so we are going to end the class for today, and tomorrow we are going to just briefly look at the income statement for those who may have heard about it and do not know. So that even if you own a business, and sometimes accountants are asked to prepare these statements, income statement, balance sheet, or statement of cash flow, and sometimes it's good that if you are a CEO, you should be able to pick an income statement and understand it.
That's right.
So it's good to have basic knowledge of these things so that you should be able to work with your accountant fluently. So tomorrow I'm going to just study, maybe look at one or two examples of our income statement just to study and understand it. Not going to deeper accounting stuff, which is meant for accountants. All right, so we can call this a day.
Okay. Thank you very much.